And I'm Dylan Tanaka.
We're making millions over morning coffee. I'd like to kick off this lovely Monday in Southeast Michigan talking about something that's going to be very important to real estate investors and homeowners, not just here in Michigan, but across the country. There's a continuing backlash in the subprime mortgage crisis that developed and kind of imploded late last year. And that is the fact that large mortgage insurers like United Guaranty, which is an AIG subsidiary, are going to stop covering loans to investors in many parts of the country. Now, mortgage insurance is what you're required to get if you don't have typically at least 20% equity in a piece of real estate, a single-family residence, which is just additional insurance, for lack of a better term, if you will, for the bank in case you go bad on a loan. They have enough equity, or they're protecting their downside. Now, what this means is the fact that these large mortgage insurers are going to stop covering investors in a lot of parts of the country. It's going to touch non-owner occupied units and especially condos. So we know a lot of real estate investors, not so much in Southeast Michigan, but across the country, do a lot of condo investing. And they're almost going to stop insuring mortgages on condos altogether. They're also going to be cutting back insuring limited or no doc loans, which means that for real estate investors that are self-employed and for a lot of individuals that are working that want to do low money down, interest only type mortgages, not only are those mortgages starting to dry up, but the mortgage insurance on those policies or on those mortgages is going to dry up as well, which means further tightening in the credit market.
A lot of us out there have heard of some of these stories, just like Adam said earlier about the condo developers and the troubles they've had. I have firsthand experience of this because a few days back at the RIA of Macomb, I was speaking to an REO broker, which is a broker that focuses on real estate owned by banks, which obviously in Michigan right now there's a lot of foreclosures, so there's a lot more REO brokers than there once was. However, what she told me was there was 15 units available right now in Chesterfield Township. They're 3 bedrooms, they have basements, and they're townhome style, so they're pretty attractive for condos. He had them listed at $119 initially, sold a few of them. I believe it's warrantable, so I think that maybe, I'm not sure, 40 or 50% sold. However, he's willing to let them go, supposedly right now, somewhere between 60 and 70 if you're willing to buy a package from him. So that is absolutely amazing to me because you're buying something for about $50 a square foot for new construction. So this ties into what Adam said about the private mortgage insurance and why they don't want to insure these condos. Because condominiums usually, when it's homeowners, seem to be younger people that come in, and they were the ones who were drawn to these loans, the interest only, the no documentation, the zero down. And the less someone puts down, the more risk there is for the bank.
That's right, Dylan. A lot of condo speculation is what drove the subprime mortgage crisis, was a lot of not necessarily investors, but speculators. I'd like to talk a little bit more about some new Fannie and Freddie Mac guidelines for condo financing as long as we're on this subject. Now, a lot of us look at condos as second homes in vacation areas, or even in parts of Michigan. They're townhomes, condos, duplexes, make nice vacation homes. But Fannie Mae and Freddie Mac will refuse to finance condos that are not at least 51% owner occupied. So that means that for investors or even homeowners that owned a condo and now they wanted to move up, or maybe they wanted to move out of state for a job, your ability to rent that condo has decreased a little bit. Now, condo association boards are going to be forced to tighten their belts a little bit more as well. They're going to be forced to be more strict about who can buy units and what they can do with those units. All this does is creates more rigidity in the marketplace. It creates a tighter and longer adjustment mechanism, which for us as savvy single-family home investors here at Michigan Income Properties creates more opportunities, because that means that more people are going to be stuck in condos and they're not going to be flooding into single-family homes, which means we still have opportunities to buy these homes for pennies on the dollar. But this hurts a lot of investors in down markets that are looking at speculating. And I want to dive into a big difference here between investing and speculating. because many people don't know that there's a big difference between the two. When you speculate, in my opinion, you are basically buying high only to sell higher. You're buying based on momentum, you're buying based on what's going on in the crowds, and you're buying high to sell higher. You're investing on the bigger fool theory, which is the fact that you are banking on the fact that there's going to be a bigger fool than you along the road to buy higher than you paid for it. Now let's talk about an investor, which is what we are and what we hope that you will become. We hope that you already are. An investor buys low and sells high. An investor dives in when other people are fearful and gets out when other people are greedy. Quite the opposite of a speculator. An investor will never pay too much for a piece of real estate.
We touched on this a few episodes back, and the whole idea of majority rules, and people think that because of the democracy, but the funny thing is when we actually go and vote, there's an electoral college, and they also vote, and they don't by law have to vote the way that their state voted. So it's a safety mechanism because the majority doesn't always rule. Those who follow the crowd are probably going to get tripped up and get trampled on. That's what exactly is what happened in Michigan when real estate was all exciting and people were jumping in, and there were the zero downs or 130% financing. Over speculation happened. Just like Adam said, investing is not speculating. Speculating is going to a craps table, rolling the dice and hoping to hit 7 or 11. When you invest, you're looking at a piece of property that was valued at $100,000 2 years ago. You're purchasing it today for $30,000. You're putting $10,000 in improvements, and that's where a small part of your speculation comes in, because you're speculating that $40,000 investment now is worth a lot more than 40 and closer to 100, even though it has pulled back a little bit. The difference with Michigan real estate, though, and I touch on this time and time again, is that the rental market has not dipped, it has gone up. So those same homes that we were buying for $100,000 that we would rent out for $900 to $1,000, we're buying for $30,000, putting in $10,000. So they're completely new roofs, new windows, new furnace. There's not any maintenance for 5 to 10 years. We're getting the same rent as we were, if not $100 more.
It's a perfect storm. It's a perfect time to get in Michigan real estate right now. We haven't said this already. Another thing that we need to look at here, we really need to draw from what's going on with the United Guarantee and the large mortgage insurers and the Freddie Macs and the Fannie Maes out there, is that the government and large insurance companies are always going to take measures. And what typically happens in all financial markets, in all markets that involve trillions of dollars like real estate or stocks or bonds or hedge funds, is that when the pendulum is over here and then the market realizes that the pendulum is too far over here, it's going to swing back the other way too far. When the Goldilocks pendulum, the not too hot, not too cold, is right in the middle, the pendulum is going to swing back the other way. And what we're witnessing right now in the marketplace, particularly in real estate, mortgage insurance, and mortgages, is that the pendulum has swung back too far this way now. What this means is that this backswing here, from here over to here, presents a great opportunity for real estate investors to get in and start taking advantage. Being smart, being savvy, being an investor and not a speculator. Now's the time to start learning. Now's the time to start managing yourself and your business more aggressively in terms of getting in at bargain basement prices. Now, if you want to learn more about how you can take advantage of the current real estate market, or you just want more information in general, you want to get the facts right, you need to check back with us each and every day. You're not going to get any fluff, no BS here. We're not out there pretending to be somebody that we're not. We're here just to give you the facts so that you can make more money. You need to check back with us here at mirealestate.tv or go to our home website at michiganincomeproperties.com. Check back with us tomorrow as we make you millions over morning coffee.